Well, good morning and good afternoon, and welcome to the October 2023 WASDE review webinar. My name is Andy Miller. I'm with DTN. I'll be your moderator today. And with me, as always, is Todd Hultman, lead market analyst for DTN. A few housekeeping items. During this event, all participants will be in a listen-only mode. You may ask questions at any time during the event. To do this, click on the chat icon located in the bottom right of your screen. This will open a messaging panel where you can write and direct your question to the webinar panelists. We will address all questions at the end of the webinar after Todd finishes sharing his report. Also, this event is being recorded and a rebroadcast link will be on the DTN website within 2 business days. And a reminder, our web address is dtn.com. So with that set up, Todd, I will turn it over to you.
Thank you, Andy. Thank you, everybody, for joining us today. We're going to take a look at the October WASDE report, as Andy said. Here on October 12th, we're getting into the heart of harvest season, and estimates are going to reflect a more accurate assessment by USDA simply because of the later date and the better quality of information we're starting to get in. Here I have it titled USDA dials in on corn soybean crops, and I think that's one of the most important features of the October WASDE estimate is that historically speaking, this is the time of year when the margin of error on USDA's crop estimates really starts to dial down. And of course, even the producer surveys that went out and were gathered and the field data that came in was basically in the last few days of September, the first few days of October. So these are fairly recent findings that went into the mix today. And so it's getting harder and harder to argue with USDA's assessments at this point in the season. And especially where we've had very unusually dry and extreme weather situations, especially to finish off the crop year. I wouldn't say that we've had any major interruption in harvest or the development of crops in the final stretch. So yield-wise, yes, but as far as maturing and getting the harvest going, things are going pretty much on schedule right now. So let's go ahead and dive in and see what USDA said today, and we'll start with corn. As usual, this is the U.S. balance sheet. The first column on the left is the old crop season. There was some house cleaning to do, which I'll talk about first. And of course, if you were with us on the September 29th report when we looked at grain stocks, you know that corn stocks came in less than expected. And that really explains most of the adjustments we see today in that left column as USDA lowered its corn ending stocks estimate for the old crop season. 91 million bushels. It's now down to 1.361 billion bushels. That was the finding of the September 1st corn stocks report. There were a few tweaks in here, but the major change I wanted to point out was in the feed category. Feed demand was increased 124 million bushels to 5.549. And I apologize here. Now I see I put the red arrow on the wrong number. It should be on the 5.549 of billion bushels of feed demand. So again, that's up 124 million bushels. That's how they explained what happened to the greater portion of the corn stocks that didn't show up as expected. There were some minor reductions to production, down 15 million bushels. That was actually mentioned in the September 29 report. And they reduced ethanol by 18 million bushels down to 5.177 billion bushels. So once again, ending stocks for the old crop season that just ended August 31st, 1.36 billion bushels, and that goes with an average farm price estimate of $6.54 a bushel for the season, which is basically just the average farm price over the past 12 months that we've seen there. Okay, now let's move to the new season, talking about the crops being harvested right now. USDA did not change any of the acreage estimates this time, so we still have 94.9 million planted acres being estimated, but the yield was reduced from 173.8 down to 173 bushels an acre. So this corn crop being dialed a little lower. I remember back at Husker Harvest a month ago when we looked at the WASDE report saying that I did expect the yield to come down in this October estimate simply because we were still in the middle of a very dry stretch of weather, and I just didn't think that the survey had taken that all into account yet, where the survey was done in late August and early September at that time. So there was a little more damage, a little more deterioration reported. Now down to 173. New crop estimate, 15,064 billion bushels. That's just shy of the record crop set back in 2016. And of course, it's largely because of the big planting uh, area that we had this year, not so much because we had such great yields, as everyone knows. But we are hearing comments that a lot of farmers are getting better than expected corn yields, and of course, expectations in a lot of areas were lower this year because of the dry conditions. Moving down the list, there were some minor tweaks. The feed demand was reduced by 25 million bushels. The export estimate reduced 25 million bushels, but basically we slide down to the new ending stocks estimate. And instead of 2.22 billion bushels, we're down to 2.111 billion bushels. USDA is giving that an average farm price of $4.95 a bushel. So at the end of the day, I think there may be some relief going on that the crop estimate did not come in higher than expected. And let me take a look here just to let you know December corn at the moment is trading 8 cents higher as we speak. So let's move on now to the what the breakdown was for the state by state yields. I think it's just interesting to compare some of the totals compared to last year. I think it's a bit surprising to me that Iowa is at 199 bushels an acre. Obviously, they had good areas, but they also had a lot of very tough, dry areas in the state that normally get much better yields than 199. The surprise to me is that this is only off a bushel an acre from last year's 200 bushel per acre estimate. So that seems like a bit of a surprise. We have been hearing good reports in Illinois. They came in at 200 million bushels, or excuse me, 200 bushels an acre in this report. That's down from 214 a year ago. We've got Nebraska better than a year ago at 174, and Minnesota worse than a year ago at 179. I'll go ahead and move on here. Let's take a look at the world corn ending stocks here today. Now, I should mention for world ending stocks, the trade was estimating an average guess of 313 million metric tons. If you see the rectangle in the upper right corner, you see the new ending stocks estimate for corn at 312.4 million metric tons. So that's just slightly less than expected. It was closely right in the ballpark for the most part. If we exclude, excuse me one second. Just had to hit that dry spot. If we exclude China, which I normally prefer to do when looking at world totals for corn and wheat, we see that USDA's estimate of world ending stocks dropped to 110.6 million metric tons, and we'll talk about that in the next graphic in just a moment. But both ending stocks estimates reduced there for the world in general. The main change came from the lower crop estimate for the U.S. That it wasn't a big change, but that's where most of this explanation came from. As you can see, the crop estimate for Argentina was increased on corn by 1 million metric tons, which seems a little surprising given that number one, they're just starting to plant the crop right now. And number two, Argentina has concerns about dry weather conditions. So it's hard to understand that small increase, but at least it's just 1 million metric tons. For Brazil, they kept the new crop estimate the same, unchanged at 129 million metric tons. I should also mention that last season's total, which is still just at the finishing up the corn harvest for Brazil, those estimates were kept unchanged. So no change in the old crop season for Brazil or Argentina. Let's take a look now here. How do world corn supplies, excluding China, look when we compare them historically? Well, we're still looking at the most in 5 years, but as I mentioned, it is a lower total today. It comes out to 4.35 billion bushels of global ending corn stocks when we exclude China. So worldwide, obviously, we have a larger crop expected here in the U.S. That's a lot of it, and we'll see moving forward if that isn't probably going to be followed by some big crops from Brazil and Argentina. The corn basis, as we've talked about for several months now, the basis in corn has been weakening throughout the summer, as it usually does. But I would say that we've transitioned now from an extremely strong basis to now we're at very average levels for this time of year. Last night's DTN corn index was at $4.60 a bushel. That's 28 cents below the December futures contract. And as you can see on this graphic, the gray lines represent the basis over the past 14 years. So we're just right in the middle of the pack for this time of year. We've kind of lost that very, very strong basis that we've enjoyed much earlier this season back to normal. U.S. exports, it's so early in the new season, I don't really have good graphics for our exports yet, but I can just mention that so far, when we look at combined sales and shipments of corn, the total is up 9% from a year ago. And of course, last year, if you recall, we had a very slow start to both sales and shipments of corn. And like this year, we're still contending with low water levels on the Mississippi River that's restricting barge traffic. But corn is doing a little better so far, up 9% from a year ago. And a lot of that is thanks to sales to Mexico, which are delivered by rail and don't depend on the river. So that's been a bit of good news for corn prices here early in the new season. For soybeans, we're looking at an export situation that is sharply lower than a year ago. Combined sales and shipments of beans are down 32% from this time a year ago. And the big difference is that 1 year ago, we were following a season in Brazil that had a drought limited crop. This year, earlier in 2023, Brazil had a record soybean harvest. They're still dominating export sales with the cheapest soybean price right now. But we have seen a nice increase in demand for US soybeans since about late July. So we are getting some activity, but certainly nothing that compares to where export sales were at a year ago when Brazil was afflicted by drought. For wheat, sorry, just more bad news for wheat exports. The sales and shipments are down 14% from a year ago and below pace for USDA's export total. And we'll talk about that more in just a bit, but we continue to struggle to find export demand for US wheat. The good news for corn, one of the pieces of demand good news for corn has also been in the ethanol market. Now, it's very obvious that the ethanol plants are enjoying much better margins this fall now that corn prices are no longer at, say, $6 or higher. So falling below $5 has helped the ethanol margin quite a bit. The unusual thing and the nice thing for the ethanol plants is that the estimated processing value for corn has really held firm above $8 a bushel. This most recent report from USDA shows the processing value $8.43 a bushel. That's what plants are getting from the combined value of ethanol, distiller grains, and corn oil. So that's a very nice margin, and that's helping the demand for corn stay strong on the ethanol front. That's a very important source of demand. The December corn price, I just wanted to show again, and by the way, this chart is as of last night, so it doesn't show the 8-cent gain today, which is going to look even a little better on this chart. But as you can see, we've been tracking from higher. We were close to $6 and traded above $6 early in the year. Now we're below $5 in between the first of the year, and now we had a very volatile summer, a lot of weather scare there, as you're very familiar with by now. But given the estimate that we're going to have a crop over 15 billion bushels and over 2 billion bushels of ending stocks, we continue to see corn prices under pressure. The nice surprise to me has been that typically we see corn prices come under harvest pressure and make their lows sometime around early October. It looks to me like the corn price has already made that seasonal low when it tried to make a new low in mid-September and just couldn't follow through. Corn prices have shown very good support here the last couple months, and for that to happen at harvest time seems like a very positive market clue as far as where prices are headed in the future. One of the concerns corn has right now are those dry conditions in Argentina. So once again, it's a little puzzling why USDA would raise the crop estimate for Argentina today, especially this early in the season. The other thing I want to note on this chart, the lower part of the chart, for some reason the labels didn't make it, but the blue bars are a sign of commercial positions in the market. And you can see that as corn prices have fallen into the $4 or the upper $4 range, below $5 basically, commercials are starting to build a net long position in the corn market, and that's an encouraging sign of support. Specs, on the other hand, are caught net short, and of course that will be most troubling for them to see a higher close today. So there could be some pressure on specs to cover more shorts ahead. All right, let's move on. Take a look at what USDA said for soybeans today. Again, we'll start with the US table and start in the left column on the new crop side. It was just very small tweaks that we saw there, but because of what was learned in the ending or in the September 1 stocks report, the new ending stocks estimate for old crop soybeans is 268 million bushels, and USDA said that that brought an average farm price for the season of $14.20. That old crop estimate is up 18 million bushels from where it was last month. Basically, there was a slight reduction in the production estimate and just some minor tweaks. So crush demand was reduced 8 million bushels. Export demand increased 2 million bushels. So after a little tinkering there, we get a slightly higher ending stocks estimate. Now let's move our attention to the new season on the far right column, and we'll see at the top that USDA came in today with a lower yield estimate. Instead of 50.1, it's now 49.6 bushels an acre. So they brought that yield down a half bushel an acre from last month's report. Again, there was no change in the acreage numbers that were estimated. The new crop total, 4.104 billion bushels. That's the smallest soybean crop we've seen in 4 years. So that right there is somewhat friendly and supportive for prices just by itself. There were some demand tweaks with the smaller crop estimate. The crush demand was increased by 10 million bushels to 2.3 billion, and the export demand was reduced by 35 million bushels down to 1.755. And we already talked about how soybean export sales are off to a slow start, so that's not too much of a surprise there. Working down to the bottom, and we see that the ending stocks estimate here in October stayed unchanged at 220 million bushels, and that is a bit of a bullish surprise on the day. The trade was looking for 236 million bushels because of the September 1 stocks report. So as things worked out with the slightly lower yield estimate, that ending stocks level will stay very tight for soybeans, 220 million bushels of ending stocks if it held up to the end of the season would be the lowest soybean supply in 8 years. So this is a bullish number, and USDA's just estimating $12.90 a bushel. But actually, I think if that number held up, we could see higher prices than that. Here's the breakdown of soybean yield estimates in today's report. The changes that did happen weren't very big. We see Illinois and Indiana both showing up with 61 bushel an acre. For Illinois, that's down from 63 a year ago. Iowa's soybean yield, very close to last year, is coming in at 58 bushels an acre. Minnesota's 48 bushels an acre is coming in 2 below last year's 50 bushels an acre. And for Nebraska, this year's total of 54 is actually coming in above last year's 49. So just a reminder of how dry and stressful things were in the Western Corn Belt a year ago, because this obviously was not ideal weather conditions in any of the states. But as we can see, it looks like once again, the Eastern Midwest held up the best as far as yields went. On the world estimates for soybeans in today's report, there was a bullish surprise. If you look at the rectangle in the upper right corner, the ending stocks estimate for the world was, or excuse me, it's not ending stocks, sorry, it's a bad habit. The world soybean stocks, USDA estimates in the October report was reduced from 119.25 billion bushels to 115.62. I'm sorry, not billion bushels. Let me start over. The world soybean stocks estimate from USDA was reduced from 119.25 million metric tons down to 115.62 million metric tons. That was a bigger drop than was expected. The trade was looking for something close to 119.6 million metric tons. So where did the surprise come from? Well, number one, we did see a lower crop estimate for the U.S. by just over 1 million metric tons. That was part of it. We saw basically a 1.1 million metric ton reduction in beginning stocks, which points to an adjustment in a prior year. So I have not tracked that down yet. The South American crop estimates for the new season stayed the same, 48 for Argentina, 163 for Brazil, and Paraguay came in at 10. By the way, I did check the South American crop estimates for the prior season, and none of those changed, so that was not the source of anything. The one other posting that did change was the demand estimate for China. That demand estimate was increased from 119 to 120 million metric tons, but it's interesting to note that the import estimate for China on soybeans did not change. It stayed the same at 100 million metric tons. So anyway, USDA noting some reduction in the US, a prior revision, and a slight increase in China's demand, and that's where we got to the lower ending stocks total here for soybeans today. Now, I want to mention, because it is kind of the elephant in the room right now, November soybeans are trading up 38 cents. And honestly, I don't think it's totally because of the numbers we're seeing in today's report. Granted, they're friendly, and there is some encouragement from them. But at the same time, we saw an early jump in the soybean meal price earlier this morning. And right now, December meal is up over $15 a ton. So it makes me think something's happening in the meal market. And I don't know, but if I had to guess, just maybe there's an export sale being worked out for soybean meal. Now that's a rumor, and I'm not trying to start anything here, but that would be my best guess at the moment. And we'll obviously be watching for news to explain that further later. That if we find, we'll have in our market comments. The soybean basis, how's that been doing this year? Very similar to corn. The basis has been weakening all through the summer, as it normally does. And instead of having an exceptionally strong basis like we had through much of last year, we're now coming to a level just like corn where we're basically in the middle of the range. Uh, uh, Last night's DTN soybean index closed at $11.88. That's 64 cents below the November contract. And as I say, that's just indicating basically a normal demand situation for this time of year as we're in the heart of the harvest season. Crush value. This is where we've seen a big change since a month ago. For much of the season, we saw crush premiums in the summer months above $3 a bushel. Now, when we look at the crush accounting here, and this particular chart is based on the January contracts that are in front of us, we see a significant drop over the past month and a half in the value of soybean meal and soybean oil. So that blue line is the January crush value. That's what you get from crushing a bushel of soybeans. It used to be close to $17 in late August. It's now below $15 a bushel. And if we compare that to the price or the cost of the January soybeans needed to crush the beans into meal and oil, we see that the premium or the difference there has fallen from near $3 a bushel down to $2.14 as of last night. So it's a little interesting to me, and a lot of this we've seen quite a drop in the soybean oil price since late August, and it seems to be accompanied by a sharp decline in the value of RINs. So if you put all those clues together, it looks like the need for soybean oil to produce renewable fuels, namely renewable diesel, has sharply dropped off in the month of September and early October. So we may see a softer demand situation here for the rest of the calendar year until we get into the new season. But obviously the surprise of the day is the big jump in the soybean meal price, and that'll help lift this crush premium back up to more attractive levels. Here's the price of November soybeans over the year. Just until recently, soybean prices had been holding up very well, looking very bullish until, as I mentioned, we've gotten kind of a slow start here on the export sales, and the crush premium started to drop. So just recently here in mid to late September, we've seen the November soybean price fall below the 100-day average, which is fairly surprising when you consider that USDA is still estimating its tightest soybean supplies in 8 years for the new season ahead. So we've got a lot of questions as to how this will work out, but of course it's encouraging to see that rally here today. All right, let's turn to wheat now, looking at the U.S. wheat estimates. I'll just mention that in the old crop season, there was a very tiny tweak made to the wheat estimate. The ending stocks estimate now in the 22 to 23 season is 582 million bushels. That's up 2 million bushels from where it was last month. So I just wanted to note that tiny change. If we look at the far right column now, we see some of the changes made from the small grain summary report that we talked about on September 29. So we see a slightly lower planted area estimate, 200,000 acres less. They're saying 49.6 million acres were planted. The harvested acre area dropped 600,000 acres, but the yield per acre increased from 45.8 up to 48.6 bushels an acre. Again, that was a finding of the small grain summary. The new crop estimate, 1.812 billion bushels, obviously led to a higher ending stocks estimate in this report here today. And you can see that instead of ending stocks of 615 million bushels at the bottom, USDA is now estimating 670 million bushels of U.S. ending wheat stocks. That's still the second lowest total in 10 years, but obviously it's a little more. One notable change on the demand tweak for wheat is that USDA increased the feed demand estimate from 90 to 120 million bushels. So even though we're not getting much in the way of export sales, at least we are getting a little feed demand recognition for wheat here in this report. I also wanted to point out in this breakdown of wheat classes that of the increase in the ending stocks, which was 55 million bushels total, it looks like 23 of that happened in the hard red winter category, and 35 of that happened in the hard red spring category. So it was the spring wheat estimate that really jumped up in the September 29 report, and we see that reflected here in the higher ending stocks today. So those are the two categories that took the bulk of the increase in today's stocks numbers. As we look at the world total for wheat, there was not much change today. In the upper right corner, we see the ending stocks estimate reduced from 258.6 down to 258.1 million metric tons. If we look at the same metric excluding China, we see a slight reduction from 125.7 down to 125.2 million metric tons. So just a slight reduction in USDA's view of world ending stocks. A couple things to mention here. We did see a reduction in Australia's crop estimate from 26 to 24.5 million metric tons. As you may know if you've been following our market comments lately, Australia's wheat areas have been very dry, especially in Western Australia this year. And part of that is related to the El Nino influence. The other question that we had about wheat today, excuse me one second. Was for Russia. We're hearing much higher production estimates from private sources looking at Russia's wheat crop, but USDA decided to stay, excuse me, with its production estimate of 85 million metric tons. So not sure what explains the difference there between USDA and many other estimates, but USDA staying with their 85 million metric ton total. USDA, however, did acknowledge a 1 million metric ton increase in their export estimate for Russia. So it's hard to deny that Russia has been dominating the wheat exports and is once again going to be the world's largest exporter of wheat in the new season ahead. While we're on the topic, this also reminds me of a point I missed for corn, and that is there's been talk recently of a higher corn crop estimate for China. USDA's estimate's currently 277 million metric tons. Just this morning, China's ag ministry came out and estimated a corn crop of 287 million metric tons. And that goes along with we've seen a drop in the corn price in China lately. So there could be something to that. But in today's report, USDA did not change its corn production estimate for China. It stayed at 277 million metric tons. Sorry to mention that out of place, but I wanted to get that in there. How do the world wheat supplies compare to prior years? And again, this is the world wheat ending stocks excluding China. Well, today was slightly smaller, 125.2 million metric tons is what USDA is estimating, or that comes out to 4.6 billion bushels. It's still the lowest amount of world ending wheat stocks excluding China in 15 years. So the last year we had a tight supply on this metric and really saw no business out of it. And unfortunately, the wheat prices have continued to drag lower and lower. The question will be, if does that going to happen again a second year in a row? But the proof will be in the pudding as we get into December and the winter months when the northern hemisphere is basically quiet. And it looks like one thing in favor of the possibility of better demand is that it looks like Argentina and Australia are going to come up short on those southern crops. So that could make the supply situation a little tighter, especially compared to what it was a year ago. And whether or not the U.S. can get some business out of that remains to be seen. Here is the export estimate so far for the new season ahead. And as you can see, Russia is clearly dominating the export scene again and offering very low prices around the world and holding the prices down for the most part, as everybody has to race to the bottom to compete for exports. So Europe is number 2, Canada has moved into 3rd place, and the US is number 4, just struggling to stay ahead of Ukraine, who is still at war. The HRW wheat basis not showing much encouragement here lately. It's fallen since mid-May down to a low level in August and basically has stayed somewhat flat. Currently, or as of last night, DTN's HRW wheat index was at $5.99. That's 68 cents under the December contract. For this time of year, that's among some of the weakest basis levels that we've seen. It has been much worse. We have seen basis levels get above $1, or I should say, yeah, get weaker than $1, which is a very tough situation for wheat. We're not quite that bad yet, but it is among some of the worst we've seen in the past 14 years. December Kansas City wheat prices, as you can see, since late July, it's just been all downhill. The one hopeful spot is the commercials. And as you can see on this chart, ever since wheat prices have fallen below $7.50 a bushel, the blue bars on the lower chart, that's the net long positions of commercials, have increased. And now at just over 27,000 contracts, that's actually the largest holding of of long positions by commercials in over 3 years. So you have to go back to the COVID pandemic to find a situation when wheat prices were this cheap and this attractive to the commercial market. As commercials are net long, the specs are heavily net short, and they have not been shy about continuing to sell into the lower prices just yet. At some point, that typically creates a bear trap, and all we need is some kind of trigger or an excuse for wheat prices to pop higher. But in the current market, we just have not had much bullish encouragement for the wheat price, as you can see. In conclusion, we did see some interesting numbers in today's report, but I would say that overall it was neutral for all three, corn, beans, and wheat. Corn, the constructive part, we did see ending stocks reduced to 2.1 billion bushels. The bad news is that's still a lot of corn, in the most in 5 years. Ending stocks stay tight. Soybeans fundamentally still look to be in a bullish situation, but we have some concerns about demand ahead. World supplies were reduced, but USDA's estimate of those world soybean supplies are still at a record high level. And then for wheat, we did see an increase in the ending stocks estimate for the US. That was largely anticipated. That total is still the second lowest in 10 years. And we still have, as far as world wheat supplies go, the lowest wheat stocks outside of China in 15 years. So those two fundamental factors really have not changed. Our next WASDE report comes up on November 9. And we'll be right back here again if you want to join us. We sure like having you. Andy, I think I've pretty much covered it today, but I'm sure open for any questions you have.
Got it. Yeah, we do have a couple of questions. First one is a question on I think a number you shared, but where does the USDA publish the combined corn processing value?
Oh, you know what? Here is my email address, and it is a report called a co-products report. So you can sure email me, and I'll send you the link because it's going to be hard to just say it verbally over the air here. but I can sure give you that link. Otherwise, you can Google probably USDA co-processing report for corn, and you'll probably have a shot at finding it that way. But it comes out every Monday, and there's a corn processing and also a soybean processing, and there's a breakdown by states, and I'll be glad to share where you can find that.
Awesome. And just one more. Two questions today. The question is, if corn were to bounce 50 cents to $1, how much would wheat follow that price? In your opinion?
Uh, yeah. Trying to think of an easy way to do the math. You know, it really has a lot to do with context. Um, I mean, we could do the mathematical comparison of a $5 corn price and a $6 wheat price or whatever it's at, and get a guess that way. But if if corn has a strong reason to go up 50 cents to $1, it really depends on what's happening with wheat. I mean, yes, the corn price will drag it up maybe at least 30 cents, but if wheat also has some kind of bullish news to go with it, it could be even better. So I don't have I guess, a precise way to give you an answer off the top of my head. Sorry.
Awesome. Okay. Well, that's it for the questions. So I'll just say thank you to everybody for joining today. And thank you, Todd, as well. And as a reminder, the event has been recorded from today. We'll have this recording up on dtn.com within the next 2. But if you have additional questions, Todd, as always, has graciously put his contact information up on the site here. So you can grab that before we finish today. And again, I'll just say thank you. This concludes our event, and we'll see you guys next time.
Thanks, everybody.